timeout. Big news from the trade front. Under mounting pressure, former President Trump has announced a 90-day delay on country-specific tariffs, sparking an immediate rally across U.S. markets. But while Wall Street cheers, global inflation data paints a far more complex picture. So let's unpack what's happening and how it could impact your investments. Let's start with the tariff developments. Trump's decision to pause the rollout of new tariffs is widely seen as a tactical retreat, a signal that the administration is trying to draw more countries to the negotiating table. And it may be working. Several trade partners are reportedly re-engaging with the U.S. Still, tariffs on Chinese imports remain firmly in place, with some topping a staggering 100%. Now, shifting to inflation. China's latest numbers show continued weakness in consumer demand. Prices dipped by 0.1% year-over-year in March, while producer prices fell 2.5%. In the U.S., March CPI data shows inflation easing modestly. Headline inflation is down to 2.8%, and core inflation is holding at about 3.1%. Meanwhile, in Norway, core inflation held steady at 3.4%. As for the markets, the reaction has been swift and bullish. The S&P 500 jumped over 9%, and the Nasdaq soared more than 12% following the tariff announcement. European markets, which had closed before the news, were down on the day, but are expected to rebound. And across Asia, Japan's Topix and Nikkei saw strong gains as optimism spread. Zooming out to other global indicators, Finland's industrial output dropped 2.4% in February, with steep declines in the electronics sector. Germany's new coalition government has announced a bold agenda focused on digital infrastructure, wage growth, and tax reform. And in commodities, oil prices rebounded. Brent crude climbed back to around $84 a barrel after briefly slipping under $80. So what does this all mean? The tariff pause may ease short-term tensions and offer a boost to investor confidence, but the road ahead is still bumpy. High tariffs on Chinese goods remain a key risk, especially as China grapples with deflationary pressures. And while U.S. inflation is cooling, it's not cooling fast enough to rule out more action from the Fed. Bottom line, this market rally could present some opportunities, but it's not without risk. Trade policy, inflation dynamics, and geopolitical uncertainty will continue to shape the global outlook. Smart investors should stay agile and diversified. And that's a wrap for today. In these turbulent times, staying informed and adaptable is more important than ever. We'll be watching for further developments that could affect markets and your money. Until next time, take care and happy investing.